I'm Kelsey from KPIstrategist.com, and I'm excited to show you how to calculate my favorite KPIs. Each of these KPIs tells the story of how a business is performing in each of the 7 key operational areas. We are literally going to have a spreadsheet open and I'll be showing you the actual math calculations of these. I also have written a blog article about why these KPIs are my favorites, so check that out if you need more background. Otherwise, let's dive right in. All right, so the first thing we're going to calculate is operating profit. Now, these calculations are going to get mathy. So if at any point you are wanting more context behind why I'm calculating this thing, then please do feel free to go back and check out the blog article that I wrote related to these KPIs. So this first one for operating profit, the calculation is basically taking sales minus all expenses except for taxes and interest. So this is a pretty simplified version of like a profit and loss statement that you would find from an accounting system, something like QuickBooks Online. Now, I'll just show you real quick, like this is what a sample P&L statement looks like. So in the simplified version, I was more so just trying to more easily show the math. And so basically, all of these are the details that roll up to something like this. So how you calculate it is by first making sure that you have your sales identified. So here is the sales number. And then you are going to take the sum of your expenses to make sure that you have all of your expenses together. Because again, these are all like various categories. So this would be like your total expenses. And then finally, the operating profit in dollars is going to be the total sales minus the expenses. And so let's just do that. And so the operating profit is this 84.57. So again, this is really looking at your true operating results. It does not factor in taxes or interest. Those are things that are more out of your operational control, so to speak. All right, so the next KPI we're looking at is under product innovation. And this derives from some of that previous financial data that we were talking about. And so on the sample P&L statement, you would see these various sales categories. And the whole point of this KPI of sales by product is to break your sales out into more meaningful categories. So we're going to break out total sales dollars by product or offer. In this case, there's actually a mix of both one-on-one revenue as well as like product revenue. So we're just going to call this like, we're going to think of this as sales by offer. And so again, like these are the original accounting categories. So we're just going to take them and make them more meaningful. Okay, so for example, you're going to want membership revenue, service revenue, and product revenue. And you'll see in a minute what I'm doing here. So for membership revenue, we're going to add these top two together. And I'm just doing equal sum. I'm going to ignore this auto refill because it's not right in that case. We're going to add up service revenue, and product revenue just has one line, so it can just be a straight up equals. And then as you can see here, the total sales still foot, but we have it into more meaningful categories. So I'm just going to
do my little underline here. And as you can see, the total sales matches this number, but we have them adding up to the meaningful categories that we want. So again, you can get this out of your accounting system, especially as you get better about having sales being booked to accounting categories that easily roll up to these more meaningful categories. Another tip is you can check out our How to Create Dashboards videos in YouTube for how you can actually visualize this data. Okay, so the next calculation I want to take you through is within the operations optimization category. So this KPI is a return on client effort. So this is really telling you, as a service provider or business, how much value are you getting out of the time that you're spending with clients. And so how you calculate this is the hours for each client divided by the sales dollars per client. So in this example, we are saying that this service revenue, the $16,093, we actually want to understand how our service revenue or one-on-one revenue is breaking out by client. And so we actually have this data from the accounting system as well. Client 1 through client 4 each has their total sales dollars for this period aggregated up. And then for that same period from our time tracking software, we've also been tracking time by these same categories. That is very important to the accuracy of this calculation. And so we also have total hours as well. And so how you would calculate that then is by taking your total sales dollars divided by total hours. And then you can just copy this calculation down to get, and I'm going to fix that underline as well, to get your return on client effort. So this is basically just telling you what dollars per hour are you earning on average, the $94, as well as by client. So the average sales per client per hour is $94 per hour. And then you can clearly see, like, I'm going to want more activity with client number 2. Clearly they're looking good. Client number 3 is only clocking in at $29 per hour. And so I would be looking at that saying, do we really need to be doing all this for only $175 worth of sales? So on this, I mentioned that where you get this information is a combination of the accounting system and time tracking system. The main tip with that is to make sure that your time periods are consistent and complete between systems, so that when you run this for the May period, and also running it for the May period for QuickBooks, as well as for your time tracking software, for example, whatever that may be, actually is yielding like that same data set. All right, the next calculation that we're going to do is under the visibility category, and that is the conversion rate on your call to action. For this, and it is reported as a percentage. For this example, we're going to focus on the opt-in. So let's say that you have an opt-in landing page and you want to see how well that's converting new subscribers to your email list. So we're just saying that we pulled some very simple data from something like a website page analytics. Something like Squarespace, for example, would have an analytics section of your website, like when you log in. Obviously, you can get more sophisticated with this and create dashboards, but this is just showing the super simple math. So on that landing page, let's say that Squarespace tells you, the Squarespace form, it tells you that there were 8 submissions. And then the amount of people or page views rather of that same spot on the website was 13. So to get that conversion rate, you're going to say, okay, we had 8 submissions divided by the 13 page views. So that would yield a conversion rate of 61.5%. So as we discussed, you are getting this information likely from your website page analytics. One tip that I have related to that is you can check this against your email marketing software's new contacts. Like this 8 submissions, let's say we had 8 submissions throughout the month of May. You should also be able to go into your active campaign and look at the contacts or new subscribers for that time period. It should be synonymous with the same number, or at least materially close, barring any small timing difference. Okay, the next calculation I want to take you through has to do with professional growth and actually a return on investment into the trainings that you do, for example. So let's say that I completed a course in April called Dashboard Divas, and I was actually saying of my sales dollars, so real quick, if you go to product innovation, remember we said we have this full one-on-one service revenue of 16,093, so that's where this number is coming from. I'm saying of that number, I can attribute $15,000 worth of sales from my new skill, from this network that I've gotten from this course. And so I'm saying I've already earned an additional $15,000 as part of this investment. So let's say the investment was $5,000. So I'm going to calculate my return, which is the $15,000 minus the $5,000, for a return of $10,000. Then converting that to a percentage, we're going to take $10,000 divided by the investment. So this training ROI that has been gained so far from completion of Dashboard Divas, like I can attribute this to a 200% ROI. And then as I start classing more sales in that way, that ROI would obviously continue to grow. So one tip that I want to share related to that is, so obviously this can come from the accounting system as well, because we are tracking our sales, we are tracking our expenses, but you can use this feature called tagging. So if you know of a specific activity you're doing, such as this, that you want to tag in a certain way, you can tag certain sales and expense activities accordingly, so that when you go into QuickBooks and filter on that tag, you can easily pull like these data points and do this calculation. The next calculation that I want to show you has to do with team growth, and very similar to the last one, but this KPI name is Team Member ROI. So the return on investment as you bring on a new team member into the team. And so this could be calculated for a contractor or calculated for an employee. The calculation is similar for either. So similar to the last calculation we did, except we're going to need to calculate value saved in place of the sales dollars that we calculated in the last one. So we're going to say that Sally was hired as an admin to take on entry-level tasks off of the CEO's plate. And she worked 60 hours in May at $30 per hour clip. And another assumption is that the CEO's hourly rate is $94. You may remember this number from the calculation that we did as it relates to the client's time. So we're just pulling that same number to kind of help you see how all the data can relate to each other. So we're going to plug the 60 hours in here for Sally's total hours that she worked during this time period that we're tracking. And then we're going to say, okay, for the value saved, this is the CEO's hourly rate times the amount of hours that Sally has worked thus far. And then from an investment perspective, similar. We're saying Sally's total hours times what we're paying her hourly is the total investment of $1,800. So the return on that is saying, okay, value saved minus the investment for $38.47. And then finally, we're going to take that ROI. So it's taking the return and divided by the total investment. So as you can see here, we have a team member ROI of 214%. So just over double of an ROI that we are getting. So where to get these numbers? It's very similar to what we talked about on the ops optimization. You just need some information from your accounting system as well as the time tracking system. And what I want to say here is that this ROI percentage stays the same even when you continue to add hours. So if I were to increase this 60 up to 80 or 100, you're still going to get that 214%. Your dollars return is going to increase. Now, the way to maximize this even more is you can increase the CEO's hourly rate also by shifting more activities, like some of those lower value activities. Let's say, for example, that client we were only making $20 an hour on. You could take some of those activities, if some of those are activities that the admin can do, take some of those activities and shift it off to them. And then you will continue to see even this ROI percentage increase as this CEO's hourly rate increases as well. And finally, the last calculation I want to show you has to do with customer experience. And so this KPI is called the Net Promoter Score. And so what this is absent showing this on the screen right now, it's basically those surveys that you get in an email that say, like, let's say, for example, Bank of America emails you and says, hey, how would you rate your experience with us? And they say 0 through 10. And like, would you recommend us, kind of a question like, how would you rate your experience? Or how would you recommend us? 1 through 10. It's those very simple one question surveys, 1 through 10. Some of them will even say, hey, can you put a little comment or tell us why you ranked us this way? And that's just to get additional information. But the main 1 through 10 is to help get to this Net Promoter Score. And so just to note, I actually want to give credit to, there's this Typeform link displayed up on the screen that I also will try to put into the comments of this video. But the little bit of background is so Typeform writes a great article about this and like how to calculate it. And I'm just visually showing you here. But a piece of that assumption is, and this is typical for these surveys, is the detractors choose 0 to 6, the passives choose 7 to 8, and the promoters, they're ranking you pretty high. They're choosing 9 to 10. And this will all make more sense as you see this calculation come to life. So let's say you sent your survey out to 100 people and 80 responded. Then of the 80 responses, 56 scored at a 9 or 10, making them promoters. So let's start to fill this out. So we sent our survey out to 100 and 80 replied. So that means that 20 did not reply. And then out of these 80, 56 were promoters. So I'm just filling out this little grid that I use to help me calculate it. And then 10 scored at a 7 or 8, so they're passive. And 14 scored scored as detractors. So you can see here that I only have detractors and promoters highlighted in a color for this calculation. The passives are actually ignored, and this Typeform blog article gives more explanation as to why that is important. And I'll let you read that on your own time. But so then I'm going to take the percentage of promoters and percentage of detractors. So to get the percentage of promoters, I'm saying equals 56 divided by the total replies that we got. And then for the detractors, I'm saying equals 14 divided by the amount of replies. So I have 70% and 80% for each of those categories. And then the NPS is saying, because the people that are detracting are taking away. So we're saying equals 70 minus 18 for a net promoter score of 52. So where do you get this information? You just survey your customers using something engaging like Typeform. Honeybook surveys could also do this, or survey Google Honeybook, just wherever you feel you can best get those emails out to people. Probably, I'm guessing ActiveCampaign has this as well. I just haven't used that one specifically. But the tip with this is to compete with yourself. There is likely no universal benchmark for this. So you want to calculate this out for yourself and then use this as your baseline to know what you need to improve your score off of.
Wow, that was jam-packed with action. If you made it this far, consider yourself a pro at calculating some of the most strategically important KPIs. Also, if you got value from this video, I would so appreciate it if you could give it a thumbs up, because I literally created these examples just for this video so that you and others could get the most out of it. Also, please subscribe if you want to see future related content. Thank you and take care.